What's going on, people? I just wanted to basically run through yesterday's trade that we took. Obviously it was Thanksgiving, and then we had the US bank holiday and stuff as well. So we had like lower volume kind of coming into the markets and for the day as well. But we did manage to catch a 3-hour trade on EU, as you can see on screen here. This was the trade. Trade was fully broken down within the Discord as well, as you can see there. Literally showed entry point and full TP. We also caught this nice SMC plug and play trade as well, which I can have a little look at in a minute. That was a 3.2R. So yesterday was a 6.2R day for the community, even on a slow day like Thanksgiving, where we've got the markets moving slower. But yeah, if I just go ahead and break down yesterday's trades, as you can see, this was it. This was the 3R that came through. I showed the entry point, getting tagged into that trade, and then before that, I showed the reasoning why I was entering that trade as well, what we'd seen in the market. And yeah, to start the day, I basically gave out the bias, the bullish bias. And then yeah, just updates on everything up to the point we literally went through and hit a full TP at 1 to 3. I did take this on a couple of accounts. Yeah, so that was a 10K, took it on a 10K. Took it on that account as well, 25K, and I took it on another 10K as well. Yeah, and I put a little story up on the Instagram on that trade, and then hit a gym session after. We're actually floating up at the minute, profit on another trade which I've got running on a couple of accounts at the minute. Yeah, so we'll see where that one comes out. This is the trade. Hold on, I'll just show you the trade. Open trade running at the moment. We did actually have quite a bit of drawdown on this, but we didn't have any drawdown on the trade for the 27th yesterday. But yeah, let's just go ahead, give you the reasoning on why we got this trade. So first of all, if I just draw it back to sort of like market openish time, let me draw back a little bit more actually to get a nice direction. So we let the Asian session print. Obviously this was when I came into the markets for the start of the day, and I was looking at the 4-hour time frame basically to see the most recent fractal break, and I needed this to be a candle closure break. Now as you can see, we have recent fractals down here, so we have bullish fractal 1, 2 and 3. We got bullish fractal 4, 5 back here as well, and a few sort of bearish fractals down here. None of these are of interest to us, even though they're recent fractals and they are like, this is recently been broken. This is just a recent fractal break. This isn't the most recent fractal break, and that's what we're looking for. Like, I know it sounds confusing, but this is actually so simple. All you do is you just look for where price had a candle body closure through the 4-hour fractal point that was made, and this is classed as our change of character because the market is shifting, so it's a market structure shift. As you can see here, this was recent and this was broken as well, but because we had this one and most recent price action that's printing now broke this one, that's how we know that we're trending to the upside. Well, we can sort of make that probable assumption in the markets for our strategy. Anyway, we then scale down to the 5-minute time frame. We drop all of that because we don't need any of it, and because we were looking to take trades to the upside, we wanted sweeps of liquidity to the downside, so we wanted to take out the lower side session liquidity of the Asian session, and vice versa. If we didn't get a trade during the London, then we'd be looking for New York to take out London session. Personally, at the moment, I'm just trading London session, so we were just waiting for a sweep of the Asia during this morning period. As you can see, we had our sweep here. As you can tell, this is where I've got my breaker structure marked out. The reason why my breaker structure is marked here is because, as you will see, we make a high within the market, so formed by a 2 candlestick pattern, and then we were just waiting for a candle body closure through that level. So as soon as we had that, that's how I could again make that probable assumption that we were going to carry on trending to the upside, so I could start looking for an entry. Once we've made that, we were basically just printed the fib from the lowest point in the market, so this was like our sweep flow formed here, and then we were following the fib level. So first of all, the fib level would have gone to here because we were looking to obviously pull back at this point. We didn't pull back, so I extended it again until the market began to reject. As soon as we got that initial rejection, which happened here, my fib obviously would have gone to there. These candlesticks are printing in 5-minute intervals, so we have time to make decisions in the market. It's not like a rushed process. It's just a simple mechanical strategy. Once we had that, all we had is the 0.618 level as our entry zone. We had this at the swing low, this at the swing high. Stop loss went on the 1.025 level, which is around a pip, or sort of like 1.5, 2 ticks underneath our stop loss level. We'd want to allow for spreads and movement, and then we just set a 3R risk to reward on this trade. which filled these imbalances, and we went ahead and saw if it hit the trade. As you can see, we got our entry tag in here after that break of structure. Price then pushed up, and at 12:30 is the end of my London trading range. So I was already in the trade by the time that range ended, and then we just allowed New York volume to go ahead and finish up playing out the trade for us to a 1 to 3 risk to reward. As you can see here, this is where we entered into the New York session. New York opened there, and we got some more volume in the markets. New York Open pushed us out all the way up to a 3R TP on this trade, and this was actually taken in, I think, what did we get in? 11:15, and we got out the markets at like 11:35. Yeah, so just over 2 hours in this trade to make, well, if you were on a 100k prop firm account, you could have literally made 3%, risking 1%, which would have been 3k on this trade. Super simple, 2 hours to make 3k, and it's a mechanical model, removing all of those decisions that you'd make, all of those discretionary movements where you may previously have traded something like SMC, which this is still an SMC based model, it's just a mechanical model, which is the difference, and that's what people fail to realize. But where you might have like a fair value gap like this, you might be like, oh, it's going to reject out of this zone, or is it going to be an inverse fair value gap, and then it rejected, and then you're like, right, so I should sell, and then it didn't sell, it came up to a full TP. It's like you can stop making all of these decisions in the markets and literally follow a checklist day by day. Like, has it done this? Yes or no. Has it done that? Yes or no. Has it done this? Yes or no. And if you don't see X, Y, and Z, then you're just not going to do anything else. It's as simple as that. Like, when I'm looking at the markets, if my criteria doesn't get met, I just walk away. Like, there's no point trying to force a trade. Just allow the trade to come to you. And that's what I think so many new traders fail to acknowledge, is like they're trying to gain that edge so much in the charts and so much in the markets that they fail to just simplify what they're doing and focus on actually being a trader. Like, having the skill of trading is great, but knowing how to trade and have a model is completely different to knowing how to be profitable and become a trader. And I think if people just honed in more on having a mechanical model, something simple, a simple checklist that they could follow every day, and then focus more on mindset, psychology, risk management, you know, the route they wanted to go with capital, whether that be funded accounts, live accounts, paper trading for however long they want, whatever it might be, and focus more on that side of things with their simple model. The data will then be there, so then they've got confidence in what they're doing, and then the data will start to actually provide itself proof within the live markets when you're trading, because you'll get profitable trades like this one that we've just broken down today, which was a 1 to 3. Taken nicely in 2 hours. So yeah, it's super simple. Simplify your trading. You don't have to make all the decisions. This is back tested, this is proven, it's got an above 50% win rate. You can trade it during New York, you can trade it during London. Whatever works for you, you just have to find what fits your lifestyle. Home in on that, make it simple, and then home in on becoming an actual trader with all of the other bits I spoke about. So mindset, psychology, everything else, risk management, all of it. But yeah, nice simple trade broken down in the Discord. Literally showed the full analysis of this trade. Like I said, showed the entry point, showed the exit point of this trade, showed the full 3R, showed the bias for the day, gave everything to the team, and we won all together as one unit. But yeah, if you want to catch more trades, make sure you subscribe so you can stay active for all of them. But yeah, this has been it from me, and I will catch you all in the next trading breakdown or just YouTube video. But remember what I said, focus on your strategy, lock down your mindset, make it mechanical, and simplify what you're doing on a day-to-day basis.